So it's great from here. It looks like all the seats are full, like completely. So this is great.
Somehow we lost some of the
anyone.
audience. Yeah.
Ready to kick things off?
Who's moderating this thing? Are you moderating?
No.
No.
Oh, you're moderating.
I guess we're going.
Let's
All
go.
right.
We're starting.
Well, welcome everyone. We have a great panel planned for you guys on how to further decentralize the Bitcoin mining hash rate. Got some incredible Bitcoin mining entrepreneurs up here. I thought maybe the best place to start would just be to turn it over to you guys, do quick introductions, tell us who you are, what you're up to, and how each of your companies is helping to decentralize the Bitcoin mining hash rate. So maybe turn it over to you, Ryan.
All right. Well, I'll leave some time for you guys, hopefully. My name is Ryan Condron. I'm the CEO of Titan. We run private mining pools. So we started about a year and a half ago and just really took a hard look at the pool ecosystem and realized that we needed highly optimized software. So we wrote brand new, like ground up pool mining software, and it's currently what we do on the Titan side. We're also helping out with the development of a protocol called Lumerin, which is a peer-to-peer decentralized data routing protocol. The vision is to treat hash rate as a commodity through a real-time peer-to-peer exchange. So it's completely anonymous, completely decentralized, and you can treat hash rate as an actual deliverable commodity. So that's the stuff we're focused on, Titan and Lumerin. Up to you.
Thanks. I'm Steve Barbour. I can barely see you guys in here, but I'm the owner of Upstream Data. We started, I guess, pushing the oil, like the Bitcoin mining thing to oil and gas producers, which is still our number one focus. We build gen sets, sort of everything, they say behind the meter, the whole flare gas thing, vent gas thing. We're based out of Canada. So we basically help oil and gas producers turn their waste energy, like vent and flare gas, into Bitcoin. That's like our core competency. We're sort of more of a manufacturer though, like we don't mine a lot ourselves. We actually help oil companies mine. One thing we've been successful at recently is they'll mine Bitcoin, we sort of custody it for them for a little bit, and then they'll spend it on more products. So that we're orange pilling Bitcoin company or oil and gas companies one at a time. And more recently, we sort of stumbled into this market with home mining. We have, I might as well shill it. There's a black box out in the conference center. Check it out. It's like a soundproof, weatherproof, fireproof, so safe enclosure that you can mine at home. So in that way, we're decentralizing mining as well.
And for 5 easy payments. So
I need Pipe to help me out with that.
There we go.
Yeah.
So I'm Bob Burnett. I'm the CEO of Barefoot Mining. We've been in business since 2017. We run mining operations in South Dakota, Nebraska, and South Carolina presently. We focus on what I call horse class mining, which would be mining between about 1 megawatt and 10 megawatt sites. We're trying very hard as well to become less and less grid dependent and do more and more of our work off grid.
Awesome. My name is Whit Gibbs. I'm the co-founder and CEO of Compass Mining. Compass Mining is a hosting and hardware sales and service company. We currently operate in 23 data centers in 5 countries. We've got 4 more data centers coming on in the next month. And the cool thing with us is we do no self-mining. So 100% of the hash rate that comes online with Compass is controlled by the plebs around the world. We currently serve about 12,000 miners in different areas, of the world, I should say. And right now, cumulatively, the plebs have almost 3 exahash online. So,
Awesome. So I thought maybe a good place to start the discussion would be kind of a quick update on what has happened in mining and the sort of decentralization of mining over the last 12 months, call it since 2021. So obviously 2021, there was this sort of Chinese exodus where the Chinese government cracks down on mining. A lot of the hash rate that used to be located in China has now migrated overseas to places like Kazakhstan, Russia, Latin America, but most notably here in the US. And so we're now in a situation where it's possible that over 50% of the Bitcoin mining hash rate is now located in the United States. So would love to get your guys' perspectives. Is this a positive development, or are we now just back in the same spot that we were 12 months ago, different country? And how does this kind of affect the security of Bitcoin and the decentralization of hash rate?
So Can I start this one?
Go for it.
Please.
So before we get into the discussion, let's define some terms, because what we see when we have the exodus out of China is we have less distribution of hash rate, right? So there's two different things. There's decentralization, there's distributed. So hash rate is less distributed globally. We're seeing it more concentrated in certain areas of the world, and that's just natural because you have cheap electricity, stable infrastructure, good governments that back certain things, and that's where hash rate congregates. But decentralization is like what Gibbs is working, or sorry, Whit. Sorry about that.
All good.
What Whit is working on is decentralization of control. So having more people have a say of where the hash rate goes. So I think as we keep pushing more and more people to get into mining, we have more facilities pop up, even if it's in similar places around the world, so it's not as distributed. It can still be very much decentralized. And that's what we're focused on, and that's what you guys are focused on. So.
Yep.
Yeah, I feel like the important thing is ownership of hash rate that's distributed. I mean, it can be jurisdictionally spread out. It could be in different countries. If it's the same companies owning it, well, it's the same ownership. So different attack vectors that might occur. Everyone worried about maybe 51% attacks or something like that. If it's the same owner, well, it's not a huge difference if it's distributed and geographically. So there's like geographical distribution, there's ownership distribution. I guess there's a various few ways to define it. I feel like the important thing is that people that are mining, you have to do it profitably. You don't want to, mine ideologically just for the sake of it. You have to be able to conserve your resources to mine profitably and succeed.
I think decentralization has to be evaluated on multiple vectors, and Steve hit on a couple, but there's geographic, there's power sources, there's ASIC technology used, there's pools, there's all kinds of different places in which centralization can occur. And I honestly think we're becoming more centralized. I don't think we are dangerously centralized right now, but I think there are some vectors that worry me. The biggest one being as movement to the US from China has occurred, it's largely occurred in megasites, and a lot of the megasite development is just starting. Like, we haven't actually seen a lot of that hash come on. And so that's a big worry to me, and I also want to follow on what Steve said. I think the ownership is a big deal. Ownership of energy and also ownership of companies. But on that ownership of companies component, I am concerned that most of the mega site development is also public companies. So I think that's a really dangerous place. And I was sharing with some of the guys backstage before, I was part of taking a company public in the 90s, and that is a cultural change for a company. And I frankly think it can be a very fiat move, that it takes a Bitcoin-centric company and forces a fiat mindset into it. And so, I know AJ's got to deal with that, but that's a hard thing. How do you not change the culture of your company away from the Bitcoin ethos, which, we're all here to make money, but we're all here to be part of this ethos and not let that impact. So,
Well, I think everything that everyone said, it really just boils down to control. And control occurs at a few different levels. You've got the boardrooms for the big publicly traded mining companies. You have the geopolitical control that comes from putting too much hash rate within one country's borders. And these are all threat vectors for Bitcoin. I think that what everyone on the stage here has done incredibly well is give everyone the ability to take some control over their own mining operations. And that is the key to decentralization, because we've talked about decentralization and beat this drum forever. But in reality, the majority of the time that Bitcoin has been in existence, there's 30 to 50 major decision makers that are controlling the majority of the network. And we saw this come out with King of Ripple Larson's change the code bullshit, right? His first thought was, let's get the 50 biggest miners to get on our side, because then we can control 51% of Bitcoin's network and we can change the code. Lots of fallacies in that argument, but one thing that is important to understand is that even someone as backwards as him knows that there's only 50 or 60 people that control the majority of Bitcoin's network. So the real push for control is going to come down to more individuals taking personal control over their own mining operations and making sure that not only are you buying Bitcoin, not only are you getting, Bitcoin back with Fold, but you should have an ASIC or two on the network as a part of your diversified strategy to secure and stack as much Bitcoin as possible.
So I'll also add in too, because we're talking about at the miner level, and we're forgetting that the overwhelming majority of miners sell their hash rate to these little entities we call pools. And if you actually look at the pool stats, I think it's very generous to say 50 or 60 people, because in reality, if you look at the pools, we're talking 3 or 4.
Yeah, true.
So if you want transaction censorship, it really takes about 3 or 4 people colluding to block a list of addresses. Now, I apologize if that terrifies some people in this room, because it really terrifies me, because we are all bought into this idea that we are working in this decentralized money, this decentralized ecosystem. But the reality is we've pulled together and we've centralized for the sake of optimization and stable payout, and we've completely forgotten what we're doing with the hash rate and who's actually creating the blocks. And if you want to see who's creating the blocks, you just look at who's signing the Coinbase, and it's all coming from 3 or 4 people.
True.
I mean, you take the top 10 pools and you have over 90% of the hash power.
And we have to be realistic that what we're doing is disrupting the financial infrastructure and power infrastructure of the world. So like I know Steve and I have both written articles in the last couple months about some of these topics. And I know both of us, we've spoken a lot about it, is we're coming from the perspective of, we have to get in front of this as an ecosystem and a community, because other people are going to be looking at these exposure points, and we have to stay one step ahead in the game theory at all times. So what Ryan points out is a very, very important perspective.
So, and I mean, not to shill my own product, because there are a lot of great pool providers out there, and we really need to back them, and we need to encourage miners, at-scale miners, to run their own pools. We need to back every enterprise that's invested in this industry to run their own pool. We need more options, because it's not enough to decentralize the control, because now that people actually can control the hash rate, they need options of where to route the hash rate. More control is more decision makers, but decision makers are only going to make good decisions based on the amount, where they can send the hash rate. So we need more pools.
Bob, you alluded to one trend that I wanted to touch on, which is sort of the proliferation of these hyperscale on-grid sites here in the U.S., even within a couple of regions in the U.S., ERCOT West, other regions like that, largely owned by publicly traded entities. Do you guys think this is just a phase? To what do you attribute the kind of this trend? And then, Steve, I know you in particular wrote an awesome article a couple weeks ago about sort of the off-grid versus on-grid debate when it comes to mining. So I would love to hear your guys' thoughts on this trend and where you see it going in the future.
Go ahead, Steve.
Yeah, what I wrote about, I look at things from an engineering perspective, first and foremost. This is my background. And I was, I guess, putting out some constructive criticism on some of the narratives around these big mines and how good they are for the grid. There's certain downsides, and I touched on them from, again, the engineering viewpoint, such as, if you build these big mines in Texas, which a lot of them are going up on interconnects and such, they're plenty good for their grid in many ways, but the question is it optimal? Like, is that exactly where the future is trending? And in my eyes, it's not exactly where it's trending. I see that more as a temporary sort of early industrialized phase of mining, where you have a lot of big money coming in, a lot of well-financed capital, and it makes a lot of sense for them to place these at strategic locations that are easy to, I won't say easy, because there's nothing easy about these massive deployments. It's a big construction project. But there are downsides, such as like transmission losses. That was one of the points I made. The beautiful thing about Bitcoin is that it's portable. It's a portable load. It's a portable sales point in the oil and gas space. Some guys coined the term like a digital pipeline. So you don't need to put it downstream. You can put it immediately upstream at the energy source. We specialize in doing that on oil wells and gas wells. On the grid, In that article, I used Riot just because they're famous and they're huge, and they built an amazing facility in Texas. But one critique I had was that, because it's downstream in the generating plants, there's certain upsides of that. One downside is that you have a lot of energy loss in the transmission, like the wire losses, the heat generated from just transmitting electricity. If you broke that up and distributed it upstream to the power plants that feed that particular mine, I just use them as an example because they do amazing marketing. But there's plenty of guys like that. So that was like one example. So I mean, we focus on like upstream stuff in oil and gas. And I see the future personally is, generating stations will have standby mines doing the same thing that we're talking about, demand balancing, load response, but doing it upstream, just sort of like our customers in the oil field are doing. They're doing it for different reasons. It's not grid related. It's like emissions related and regulatory related. But that was like one of the views. And the other view I had is there's another sort of force that pushes it downstream. So there's like efficiency sort of pushes it upstream. There's also privacy pushes it downstream. You cannot mine privately in a multi-gigawatt facility, right? Like everyone knows you're there. You cannot hide it, right? I did a talk a couple years back in Vietnam talking about private mining. You can only really mine truly privately, and even Austin's not up here, but Austin at Galaxy has criticized that, where even small-scale mining has a signature on the grid. Like you can sort of, through some high tech, figure out if people are mining at home. But small-scale mining is the peak privacy, whereas upstream, say downstream small-scale is peak privacy, upstream is peak efficiency, and so there's sort of like a balance. So it's sort of a different view on it, but that's sort of the way I think about it.
I'll some insight into mining, especially any of you who may be interested in getting into it. Every deal requires three things: an energy deal, mining technology, mining machines, and capital. And I've spent the last 5 years chasing those three, and at any one point in time, one of them is hard. And so I think the big guys, especially those that have gone public, what they've done, to make their business easier to a certain degree, is they solve the capital problem right up front. And that makes solving the other two problems a little easier. So I think one of the reasons that we see this proliferation that way is because of that. And the reality is right now there's a lot of money that wants to come into Bitcoin. And the bigger money doesn't want to just buy Bitcoin, but they understand that mining is essentially portfolio diversification for them too. That it gives them, in simple terms, almost a long-term dollar cost averaging strategy, and it provides a base level, because a dollar invested in mining, even if Bitcoin goes down, let's say over the next 4 years, a dollar invested today is probably still showing a profit 4 years from now. So because new hash won't be coming in at the same rate. So I understand kind of why it happens. I hope it's not a long-term trend, as Steve said, because I'm not sure it's really the best architecture. But there is some chance of it just completely overwhelming the infrastructure as well and making it difficult for the rest of us, from the small-scale miners to the home miners, to compete.
Well, and on the other end of the spectrum, one trend that is giving me hope has been kind of the proliferation of subscale, either home miners using solutions like your black box, Steve, or at the hobbyist level doing kind of hosted retail mining, the way your customers are at Compass. Talk a little bit about why this trend has picked up now in the last, call it 1 to 2 years. What are these customers looking for? What gives you hope that we can sort of like counterbalance against the trend towards large hyperscale on-grid deployments by distributing some of this hash rate down to the lower levels, smaller subscale operators?
Yeah, I think that really what it comes down to is, and I know there are people who will say that this is not the case, but I think that in the last year, more people have realized that mining is available to them, is really what it all comes down to. Sure, there have been people who would do smaller deployments for people, But I just don't think that there was any big press or marketing behind it. And when
Mining wasn't sexy a couple years ago.
But I mean, and the thing is it's been profitable since inception, as long as your cost basis is correct. And when we came into the market at Compass, our goal was to make sure that we could tap into the certain economies of scale, which would allow our hosted customers to achieve favorable power rates, favorable prices on machines, so that they could mine profitably for the long term. And what we saw is, as soon as we went to market with a product, it took off like a rocket. And it wasn't because we were offering anything massively revolutionary. We were just willing to do what other companies weren't, and that's get in and help somebody who wants one machine with one space on a rack to get access to mining. When you talk about a lot of these very large hosting companies, and they're fantastic, by the way, not throwing any shade here, but they're looking for as few massive clients as they can get, right? They want to have the least amount of counterparties that they can. And when we came in, we're like, look, come one, come all. We'll take everyone that wants to mine Bitcoin. We'll figure out a way to help you. And people responded very well. And then, following on with at-home mining, just to throw a little love Steve's way, I think the coolest thing about the black box is that it solves for all of the problems that home miners have, because you plug 2 of these machines in your kitchen, like, okay, maybe you'll mine some Bitcoin, but your wife might leave you. I remember the first time you showed me this, I'm like, this is going to save so many marriages.
It's the wife saver.
It is. So I think
You're undercharging for it, Steve.
I used to run an S3 miner in my bedroom during the winter. I just closed the door and let it run, and heat it up. I think we've gotten to the point in the industry, though, at-home mining will never compete with enterprise scale.
Agreed.
I don't think we'll ever go back there. We started with mining as a hobby. We moved into mining as now an industry, and I think we're very quickly approaching mining as core infrastructure.
I agree and disagree with that. A lot of our customers on the black box and a lot of the memes that were generated had to do with privacy and like KYC free Bitcoin. I hired a guy off Twitter who makes great memes to make a meme, or like a GIF, whatever you call them.
It's GIF.
And I got him to draw a black box because I named the product for a reason, and it's sucking in fiat and spitting out Bitcoin.
Yeah.
And I also memed it by getting him to suck in like Coinbase symbol, Kraken symbol, all the exchange symbols, and put out pure Bitcoin, because one of the big, I won't call it a problem, but like one of the big initiatives right now is surveillance, right? Coin surveillance. Companies are, calling coins tainted if it's not mined by coal panels, also known as solar panels. So like, there's all this like rhetoric around coin taint, which is all very subjective. And so there's a whole market of people that want privacy. So while you're right in the sense that home mining being furthest downstream on a grid can never compete with anyone furthest upstream on a pure economic basis, there's a whole different force pushing it downstream. That's what I tried to distinguish just the last time I spoke. There's efficiency and there's privacy, and privacy pushes downstream.
I think we can put a privacy layer on top of. Clap for him first. Sorry.
Please clap.
Yeah. So I think we can have the best of both worlds here, and this is actually why my team, once again, not to show what we're working on, but we're working on an open source protocol called Lumerin, and the purpose of this protocol is to provide decentralization of control of hash rate. Hash rate is always going to congregate around what we said is low power, stable infrastructure. We're always going to see that centralization aspect or that lack of distribution. So we get economies of scale. But now we need privacy, we need decentralization of control, and that's where Lumerin comes in as a decentralized routing mechanism, where you can actually create smart contracts to broker the buying and selling of hash rate. And it's all anonymous, it's decentralized, and now we have a DEX for hash rate that we're working on, where anyone in the world can now buy hash rate, and someone in Southern California can control hash rate that's being created in Texas completely anonymously. And that's freedom. That's not KYC, that's not AML, that's That's literally people buying hash rate from someone producing hash rate. Because at the end of the day, hash rate is a commodity. It's a direct derivative of electricity. We're not burning electricity to get coins. We're translating electricity into hash rate, and now we're transmitting hash rate globally through a decentralized ecosystem. So now we're touching on the green narrative and all that other stuff, but hash rate is just another commodity. It's a product that we're producing, and if we treat it like that, we can completely rewrite the narrative in that space as well.
One thing to dovetail on what Steve was saying earlier, and I mean, we're seeing this as well, ROI is still important, but it's not the main focus for everyone that's getting involved in mining now.
Yeah.
I think that there really is a desire to participate in the network, to have a machine that's on the network and working to earn you Bitcoin. But I mean, we've been historically spoiled in this industry, right? There's not another industry in the world where you're going to invest capital and expect a 12-month return on your initial investment. That's not realistic in most other industries. So now we have people who are coming to this space, and I know Adam on your team has talked about this a lot. People who used to invest in real estate are now coming and getting involved in mining. And if you think about purchasing an income-producing property, whether it's a rental property or you're going to flip a house, you're going to buy that, and if it's a rental property, you may not see that return on your home for a decade. But if I take that same $500K and come to mining, even if it's at a not great cost basis, you're going to end up seeing an ROI on that investment in call it 16 months on the long side. So we really are now seeing people who are coming in and they understand that the economics are good enough and it's worth investing and getting involved. But they're really here for the ethos of Bitcoin. They really are here as true Bitcoiners who want to transfer fiat into Bitcoin, and the most efficient way to do that is through mining.
And I want to jump on that because one of the great things, if you're an individual miner or you're a small investor, type of people that we work with, you don't necessarily evaluate the ROI the traditional way that ROI is evaluated, because we all know 1 Bitcoin is equal to 1 Bitcoin. So you don't have to measure if you're a home miner or you're a small scale miner. So the way we look at it, we're not necessarily measuring based on what the fiat price is a given day as to whether or not we're profitable or not. We're looking at how much Bitcoin are we generating, and we value that Bitcoin completely differently than whatever the world says it's worth today. And I think that's the great thing about the small scale miners. In addition to privacy, they just value the Bitcoin fundamentally in a different way than the rest of the world views it right now.
Yeah. A great story to Whit's point is I was looking at there's a company called GridSeed that had this first Script ASIC back in like 2013. And they came out with this blade miner. And I told my neighbor about it, and he was like really interested in Bitcoin and wanted to know about how all this stuff worked. And I said, look, I got one of these models, and he's like, you can buy it for $500. And you just plug it in, connect it to your computer. This was end of 2013. I said, just put it in your office, forget about it. That's what he did for the next 2.5 years. And finally, his wife got tired of the office always being hot and the old computer sitting there on the desk. She unplugged it all and threw it in the closet. 2017, 2018 rolled around, and I knocked on his door. I said, hey, Todd, do you still have that old miner I sold you like 3 years ago? And I said, what happened to that computer? And he thought his wife threw it away. And I mean, it was an investment that he had completely forgotten about, and it paid for itself like 10 times over.
If an ASIC, if a Bitcoin machine was worth zero, what is it? It's like your very own personal Bitcoin exchange, right? You're exchanging your energy for Bitcoin. So if you look at like the long-term trend, and MicroBT just announced a new product. You've got the S19s, the S19 XP, Intel's coming out, but the edge over each other is getting tighter and tighter and tighter. It's becoming a commodity. So I look at it like in 20 years, when these things are just like the differences between them, or they're selling them on like this bell or whistle that they have over the other guy, and they're more of a commodity. I often compare it to engines, right? The early internal combustion industry was a lot like this now. There's a lot of innovation. Otto is famous for the 4-cycle engine, but there was actually plenty of people that preceded him and came after that iterated. but the engine efficiency eventually peaked and it sort of became a commodity, and now engines are just, I mean, a lot of engines sit doing nothing. So I see the future the same with ASICs. I see them sitting doing nothing, becoming cheaper and cheaper and cheaper, and mining becoming more accessible to the masses more and more and more.
Well, to jump on that, I grew up in the personal computer industry, and look at the price curve of personal computers, and now the lack of differentiation between one model to another. That will happen.
Yeah.
That will happen in our industry. We're still very, very young, and you'll probably be able to buy one at Walmart a decade from now.
One, when, I don't know if you're alluding to it, but a lot of people online I've battled with would say, mining is centralizing. Mining has always been decentralizing. It started with Satoshi, that was as centralized as it gets, the early miners. And I mean, I know we're all scammers up here. Everyone's a scammer. If you know that saying, you know what I'm talking about, right? Everyone's a salesman, and we're all up here also selling ourselves or product. But I sort of lost my point, but
That was a great point. I don't know, it was like
Scammers. We're all scammers.
Everyone's a scammer.
If you remember anything from
I need that T-shirt. We're all scammers.
I was going to say that mining has been, in my opinion, been trending towards decentralization of ownership in any way, whether it's people owning through your service, hashing through your service, or owning them at home like us. It's been a decentralizing trend in general. And I really don't see it going the opposite, but that's always been a narrative that, home mining is dead. I wouldn't sleep on it, and that's what I meant by everyone's a scammer, because obviously I'm selling a home mining box, but it truly, in my mind, is going, it's distributing, it's spreading out over and over time. So.
Well, I think as the industry matures, we're going to see some consolidation. It's natural. We have all of these publicly traded mining companies with access to capital. We've got new market participants that are coming on, but they're kind of hitting their growth ceiling because they don't have the access to capital that other people have. Mining historically hasn't been a venture-backed business. It's not a traditional business. Like you can go to Sand Hill Road and get a VC to write you a $100 million check at a $4 billion valuation because you have a white paper, right? If you had a token, maybe that would work, but
if anything's a centralizing effect, it's fiat. Fiat is a consolidating entity,
toss
right?
that up there for Steve.
Yeah, just
I get that on a T-shirt too. Yeah.
fiat, right? They print money and they buy everything up, right?
Right.
The mergers and acquisitions industry is based on fiat money printing.
Correct.
Consolidation of mining it's money printing. They get it for nothing and they buy it all up.
Yeah.
So I mean, so in that sense, from a monetary property basis, Bitcoin is the opposite. It's a money produced by the people, and it's a decentralizing, fracturing effect. It's not a consolidating effect.
And I think that's why we're all here.
Yeah.
I think when it comes to decentralization, it's nothing is ever 100% decentralized or centralized. We're always working within degrees of centralization, and we have to weigh how decentralized versus how much risk are we willing to take. And a lot of that is how involved are the governments? Who are we working with as a centralized authority? And then that's when we counteract the risk with decentralization. At the end of the day, we are trying to avoid censorship. We're trying to make sure that this is open. This is for everyone to use. This is literally money of the people, by the people, and we're building it ourselves because I don't know about you guys, but I was born into a banking system that I had no say over. Yeah. We were all born into an ecosystem in this world that was decided for us 200 or 300 years ago and iterated on top of that. And that's controlled by people that we don't know who they are. We don't have connections with them. We don't have contact with them. And we're taking it back.
And I love that, Ryan, and I want to add a couple things. And one is we're trying to build forever money. We're not trying to build money for today. We're trying to build money forever. We have a one-time chance in the history of mankind to do it right, and this is it. Okay? If we screw it up, we'll never get another one. We're going to be constantly threatened. And I think just, we as part of this ecosystem have to have our eyes and ears on, as these things try to centralize and consolidate, we just don't let it get too much so. Anybody that wants to geek out, I wrote an article about a month and a half ago for Bitcoin Magazine, and I went through some of that. And this is just my opinion, but I think as long as we never get over about 70% in any one vector, we're not really in any trouble. 85% is a real danger spot. So like what Ryan talked about is maybe where the pools are right now. That's maybe a present danger spot. But everything is completely preventable. We can keep the ecosystem completely defensible by just not letting ourselves get too far.
So we've got a couple minutes left here. I think a nice place to end it would be to hear from each of you. If you could see one thing from the mining community, the pool community, Ryan, to help further decentralize the hash rate, what would you like to see in the next few years?
Ooh, I'm going to toss this to Whit to start.
I think the most important thing is everyone needs to plug in an ASIC, steal that one directly from Steve's Twitter. But ultimately, that's the solution for the problems that we're facing with Bitcoin. Everyone needs to plug in an ASIC. Wherever you are, you should be running an ASIC, whether it's at home or with a mining services company that can provide hosting, or if you have access to a little bit of capital and you want to build something of your own. Whatever the case may be, is if you are here and you are a Bitcoiner and you are in this for the long term, you have to plug in an ASIC. You have to. Anyone who tells you that it's better to mine Bitcoin or better to buy Bitcoin than mine it, or mine it than buy it, doesn't get the holistic approach to the entire ethos. You should do it all, right? You should be doing everything that you legally can to accumulate as much Bitcoin as humanly possible. And the first place that most people need to start is plugging in an ASIC and starting to mine.
Yeah, I'll just add something that we didn't really bring up, and that's that I think to the degree that we can, the efforts in like the natural gas area, my company, Barefoot Mining, we put a deal together where we acquired our own hydroelectric facility that we operate completely behind the meter. Controlling the energy is a really, really important part of this infrastructure and making ourselves indefensible. So, anytime you see an opportunity to support somebody that's doing those efforts, I would encourage you to do it. If you have some ingenuity, you have ideas, I think that there is a phenomenal amount of opportunity in that space, and don't fall for all the ESG stuff. Do it because it makes money. Do it because it's right for our infrastructure. We're not boiling the oceans. We're not killing the planet. We're doing what I believe is the most important thing in the world, which is fixing money.
Well said.
Trying to think of something cool to say. I agree with Whit. What was great for me was learning about mining a Bitcoin by mining, like getting an old S9, one of those grid seeds. I started with a Gecko miner stick miner. I don't know if you guys know that.
Yeah.
And I plugged it into my computer. I didn't know anything about code, and I figured out how to run CG Miner, which was a big deal for me. I can do Excel spreadsheets, but that was a big deal. So education is one thing, obviously, and that's why I love the content providers, like writing stuff. You guys have all written stuff. Marty's podcast, I see him in the crowd, so I like to shill Marty. You should listen to that. Education is number one. Mining's important. I sort of look at it like profit seeking is actually what matters, and that sounds like this ultra capitalistic thing to say, but if you're not doing what is most profitable for you, your family, then you're wasting your own resources, and that's not good for you, and it's not good for the Bitcoin network. So even though I want you all to mine, I do believe in some cases buying Bitcoin is better. Mine it when you can. Mine for education, for sure, educational purposes, but you got to seek profit, because ideological behavior is great on paper, but if you lose all your resources and your ability to put food on the table because you're doing something in the name of the good without actually making any money doing it, well, you're shooting yourself in the foot. Make money.
I need that t-shirt also. What would I like to see the future of mining and decentralization? I would love every single stakeholder in this industry on an institutional level to run a mining pool. Every large-scale miner to have their own mining pool. I want them to be transparent, auditable. You know, I don't want these black boxes. I want, not referring to you. But I want to see more choices
He's
when it
bigger
comes to
than
that.
me, and he thinks he can bully me on stage.
A little parting shot.
No, yeah, by his black
Welcome to my
box.
world.
No, I want to see more options when it comes to pools. I want to see every renewable grid to be counterbalanced by mining. You know, I want to see that load balancing effect. So whether it be in California or Texas, I want to see governments getting involved in that level and making sure that their grids are properly supplied with hash rate to counterbalance. You know, I want to see hash rate more accessible to people, even if it's productized. If we have to wrap it in NFTs, if we have to wrap it in some user-friendly application, I want everyone to be able to purchase hash rate, to own hash rate, to control hash rate, to be able to put their vote into the ecosystem. If there's a BIP or a protocol update, I want everyone to have a say in that. I don't want 3 or 4 pools to be able to do that. I don't want at any point in the future for any government to say, these are a list of addresses that can't transact, and this is your whitelist, and then to hand that off to pools, and now all of a sudden we have censorship. Like, I think that would be the end for me. So anything I can do to stop that, that's what we're doing.
Beautiful. That's all we got time for. Thank you, audience, for coming out. Panelists,
Thanks,
thank you for
Gary.
joining me. Appreciate it.